Hello friends, I am Dipendra Gadkari. Welcome to my channel Mango Money, where you will learn interesting concepts on finance and stock markets. So let's begin. So in the first segment of Basics of Stock Market series, we begin with the topic Human Nature and Markets. Do you think India will win tomorrow's cricket match? Lagi sauce ki? Do you think it will rain tomorrow? Lagi doso ki? We all have some or the other time taken such seemingly small bets on everyday events since our childhood. Speculation is derived from the Latin word speculare, means to observe. It also means to arrive at a decision with insufficient information. We all live in a world where we have to arrive at fast decisions with very less information. Speculation or gambling or trading or satta or jua, name it anyhow, it evokes negative emotions from masses and is generally frowned upon. But people don't realize that we are continuously speculating on various life decisions, like which company to work for, which careers to select, which education stream we should select, whom to marry, but nobody knows as to how that career, how that job, how that marriage will eventually work out. Still, we take a bet that these decisions will eventually work out. In an ideal world, where we had all the information, speculation wouldn't exist, as there wouldn't have been any uncertainty regarding future, and all the world would have been a very happy place. But in reality, there is a huge information gap and our time is limited. So we have to work with whatever limited information we have, and we hope that we arrive at the best decision. We try to limit our losses because that's the best thing we can do. Now let me take you back thousands of years ago, where humans were in the hunter-gatherer phase, where they had to roam around the jungles for basic food. Initially, many humans were killed by wild animals in the jungle. So they started speculating as to how to survive in the wild jungles. And there was limited information as to the safety of jungles. So either they could go to the jungles and get killed, or sit at home and go hungry. There was a risk there. So humans reduced this risk by 1. Hunting in groups, and 2. Creating powerful weapons like spears to hunt down these wild animals. So in the initial phases, we as humans speculated for our survival and reduced our risk by creating tools for protection. Next came the Middle Ages, the ages of vast empires like the Roman Empire, the Ashoka Empire, the Genghis Khan Empire, where humans evolved to more sophisticated forms of speculation. There are many historical records and wall paintings that show the game of dice and its different names like Pachisi or Chaupar in India, Astragalus in Egypt, Luibo in China, Shatranj in Persia, dating back to 3000 BC. These were simple board games that fulfilled the need of masses to gamble. Speculation in the game of Chaupar was a key turning point in the ancient Indian epic of Mahabharata, which followed the decisive battle between Pandavas and Kauravas. Then came the Industrial Revolution, where speculation helped create multiple industries and institutions like the stock market, the insurance industry, and the modern company structure. The merchant ships from various countries like England, Netherlands, Portugal, Spain started traveling across the world to establish trade links. Sea voyages were very risky ventures, as they had to face various conditions like storms, bad weather, piracy, and many horrible conditions. There was a very high chance that the crew on these ships could die along the way. The merchants still took the risk because the incentives far outweighed the risks. They could buy very rare herbs, silk, tea, gems from these resource-rich countries like India and China and sell them back in their native countries. These merchants were very useful for the kings and the queens in their native countries because they helped them earn a lot of money in the form of taxes and to help them to finance various wars. So many kings and queens incentivize these traders with capital, tax holidays and other inducements in return for the lucrative trade routes. Many European nations use trade as a weapon to expand their influence across the world and establish permanent colonies. So merchants created the world's first stock exchange in the city of Amsterdam in the year 1611 to raise capital. The Dutch East India Trading Company was the first publicly traded company on the Amsterdam Stock Exchange. Many insurance companies sprung up across the Europe to reduce the risk of these merchants when they undertook their risky sea voyages. So speculation for resources was a key point, instrumental for various geopolitical events that happened during the industrial age. Now coming to the information age, the age which we live in currently, it's a hyper-connected world where information is available on fingertips. And thanks to technology, speculation is a formal industry in the form of various banks, hedge funds, mutual funds, and various financial institutions. Risks have also risen exponentially because of this hyperconnectivity, as a small crisis in a small country somewhere in the world can lead to a spiral effect on the global economy. So to reduce this risk on the global economy, there are various instruments created like asset diversification, hedging, swaps, etc. The rewards of the information age have also increased exponentially due to access to information, leverage, and creation of more complex financial products. So the common theme across the ages has been that humans tend to reduce risks and maximize rewards. So this is the fundamental principle that we will always keep in mind, that is to reduce risks and maximize rewards. Be it in our investment, be it in our trading, be it in our life. Now, let me take you to how human nature and speculation are connected. Simple question. Do you wish to live like a king in the 15th century India or an upper middle class person in India today? Most of you would have selected the king. But surprisingly, the upper middle class person in India today has far more luxuries and tools to make his life lavish than the 15th century king. Due to advancement in technologies, we are living a far wealthier, healthier and happier lives than say 500 years ago. But humans, being humans, are always unsatisfactory. We tend to work more to create a better future for ourselves and our children. There are two primary emotions that drive our decision making. One is greed and the second one is fear. These emotions manifest themselves during our investments in various asset classes. Our fear drives us to buy a house so that we have a safe place to stay. Our fear drives us to buy gold so that we have something to sell in case of any crisis. Our greed drives us to invest in risky option trades which help us to earn huge amounts in a very short time. Our greed drives us to invest in shady chit fund companies which guarantee to double our money in a very short time. So as you can see that how we use speculation to satisfy our emotions of greed and fear for the primary purpose of safety as well as prosperity. But the default setting of humans is inertia. So we wish to make maximum amount of reward in the least amount of effort. Speculation helps one to attain their desired goals of safety and prosperity with relatively less efforts. Modern age has opened up many avenues to satisfy this need of human progress. and stock market is one such important avenue. So how do we use speculation to attain our goals? It's very important to understand human nature if one wants to benefit from speculation. Individually, we humans might be the most rational, intelligent, बोले तो एकदम smart people, taking decisions on cold, hard facts. But as a group, we are subjected to the might of masses and its emotional appeal. And when these masses becomes greedy or fearful, it leads to crazy bubbles and busts. It would be smarter to understand the beginnings of the bubbles and the busts so that we can position ourselves accordingly. And markets, being the crazy emotional beasts that they are, generally take prices to crazy extremes on the upside as well as the downside. As some great scientist has said that artificial intelligence is no match for human stupidity, this is our key advantage as market observers. We humans are bound to make huge mistakes when we are very emotional about any particular asset class like stocks, real estates, gold, or lately bitcoins. As the great Blaise Pascal has said, all the men's miseries derive from not being able to sit in a quiet room alone. The fluctuations in the stock prices that you see on business channels technically have no meaning. They are just pure hard cold facts about the market's opinion about the company. The desire for activity is in total opposition to the success in speculation. We engage in speculations only and only when it's profitable in relation to the risk we have taken. Also, an interesting characteristic of human nature with respect to speculation is that the pain of loss is more than the happiness of gain. So for an example, ask any person who has been active in markets for a long time. He might not be able to remember his biggest wins, but he will definitely remember his first biggest loss. Losses linger on our minds for a long time and cause us immense pain. And this pain, and in this case the pain of loss in stock markets, leads us to take two courses of action. One, either we reduce our actions in the stock markets, that is, we don't trade, we look for different avenues, or on the worst case, leave the markets altogether. So the solution for this is that we make ourselves emotionally stronger so that we can handle these small losses, and trust me, there are going to be many. We are common retail investors trying to understand the basics of markets. We wish to become experts in the art of calculated risk taking in the stock markets. We need to become adept at follow the money approach so that we are one step closer to smart money. You will learn many techniques that will help you become a smarter risk taker at the stock markets in the coming lectures. Having said that, let's build a solid foundation to understand the world of stock markets, and the first step begins with you. Yes, you. Want to know more? So let's watch the next video of knowing yourself and the markets. If you got value from this video, hit the like button, share it with your friends and family, and subscribe to my channel Mango Money, and I will see you in the next video. Bye for now.